I'm going to open up my PowerPoint. Slideshow from start. Swap displays. All right, hold on one second. All right, if I can figure out how to I gotta get, there we go. Okay. I am. Okay, do you guys see my PowerPoint screen?
Yep.
All right, I'm a little worried what happens when I think when I start the slideshow, what's going to happen is it's going to take me out of, I won't be able to see my Hangout screen, so hang on one second. All right, so we're going to kind of work from within the presenter mode if you guys don't care, because if I put it into slideshow, I'm not going to be able to see Hangouts. And then I won't be able to let people in. But so it's okay, you guys can see what it says, what goes in?
Yep.
Okay. That there you go. Okay, so let's talk about the concept of millionaire real estate agent when it comes to finances. When Gary wrote the budget model and put together the P&L, it assumed that the rainmaker would always track all of the income. And what happens when we talk about this is some people get a little bit crazy because they think that if they track all of the income, that they're going to end up paying taxes on all of it. Well, what we track in a financial tool in a profit and loss statement has nothing to do with taxes, right? So don't be afraid of that. Don't worry about this having tax consequences. The best thing I can do is I can tell you is if you look at the slide here, from today forward, when we talk about the money that goes in, when we talk about all of the income, we want to talk about the gross commission income, not the money that gets paid to the team. So from today forward, when we say commission or income, we're always talking GCI, and we're talking the gross amount that the consumer paid at closing, not what the agent got paid from their broker, not what happened anywhere else, but we're talking about the gross amount paid by the agent, paid by the consumer, right, at closing. So what goes in, or the gross amount, will always be what the consumer paid, not what you took home, okay? Then we're gonna, as we work down that, it's just to help you understand, it's gonna include listing income, sales income, which is what we mean by buyer income, referral income, leasing income, everything. It's all going to be counted as income. Now, later on, you'll see in the P&L that it makes sense to break it up into categories, listing income, buyer income. But from today forward, whenever we talk about income, we're always going to talk about the gross commission income, which is what the consumers paid at closing, not after your splits or not after your team was paid. Does that make sense? Does anybody have a question? You guys can all self-unmute. I do not, there's not a group mute. So if you want to unmute yourself to ask questions, feel free. If you want to leave yourself muted for background noise, that's fine too. But does that make sense? Does anybody have a question? When we talk commission income from today forward, we're talking GCI. Got it? Okay. And Kelly, this is not being recorded because I don't know how to do that. So
I'm recording it, Matt, so if I can put it up later.
Okay, great. Thanks for doing that. Okay, so now let's go on to number 2. So if what goes in is going to be everything, then the next question becomes what goes out, right? Is going to be divided into 2 main categories: cost of sale and operating expenses, right? So, and then there's going to be lots of subcategories, but cost of sale and operating expenses. When we talk about cost of sale is what it cost you to make the sale. These are generally at Keller Williams, these are the expenses that are paid on the green sheet, right? So generally, these are the things that get paid that would not have been paid if the deal never closed. So it includes commissions paid to the office, royalty fees paid to KWRI, commissions or splits paid to employees, independent contractors, and referral fees, right? So what goes out when we talk about cost of sale, if I'm the rainmaker and my buyer's agent closes a deal and we're on a 50-50 split and the consumer pays $10,000 at closing, we're going to track the income as $10,000, and then the cost of sale, we're going to track what we paid to the buyer's agent. We're going to track what we paid to the office. We're going to track what we paid to Keller Williams International if we're still paying a royalty. Does that make sense? Anybody stuck on that one? Okay, so then the next part is, well, operating expenses, which is everything that's left over. These are all the costs that are associated with running your business. Your desk rent, auto expenses, salaries, insurance, marketing, signs, lock boxes, IDX, everything else that's not directly tied to a sale. Now, like sometimes people will say, well, what about a photographer? What about a stager?
Property and fish.
When we talk about photographers or stagers, generally we have to pay that bill regardless of whether the property sells or not. So even if you might pay them for convenience at closing, they're really an operating expense, right? So operating expenses, think about the operating expenses as your obligatory or your obligations that you've got to pay. You got to pay your buyer's agent, a listing agent, and your broker, right? The biggest reason that we want to track operating expenses is because we believe that this business is truly our business, not the brokerage business. And if we believe that that's true, then we should track all the expenses associated with running the business, not just the expenses that we pay ourselves. Let me give you an example. I was working I'm an operating partner for 3 Keller Williams offices, 2 in the States and 1 in London, England. I'm also one of the regional owners of the UK region, and I have my own sales team. Right. And so I was working with my team leader to help recruit a top producing agent. And when we were talking to this agent, he said, Matt, you're on a 70-30 split there. And I'm on a 90-10 split. He goes, why would I ever go to a 70-30 split? And I said, okay, well, let's back up, Jeff. Let's talk about how much money you're really paying your broker. He goes, well, I'm paying less. I'm paying on a 90-10. I said, well, no, our 70-30 caps at $20,000. Right, so you got to cap them out. He goes, yeah, but it's so much more money. I said, okay, what was your volume last year? Well, his volume the year before was 50 million, right? So if you take 50 million, and let's just, for easy numbers, let's say that he brought in a 3% commission on everything. It means he brought in 1.5 million in GCI. Well, if he's paying 10% that never caps, it means he paid 150,000 to his office. And I said, in our office, you would have only paid 20,000. And he totally just didn't get it. But what we want you to understand, eventually he did, but what we understand is that the expense of the brokerage, the expense of international fees and stuff like that, those are your business expenses. In traditional real estate mindset, the traditional real estate mindset is that the broker pays us X% of the commission. In today's world, we look at the other way around and say, the broker I affiliate, I pay them X% of my commission, right? Because the question comes down to whose business is it? When was the last time the brokerage generated a lead for you, right? It's your business. So you should track your expenses. And so the GCI is yours. They're your client. So what you do is you take your client and you pay X% to the broker, you pay X% in royalty fees. After that, the rest is yours. So the mindset needs to be that you want to track all of it. And that's why we track cost of sale, all the expenses that lead up to the sale, and then operating expenses, all the things that you pay on a day-to-day basis to run your business. Does that conceptually make sense? Anybody have a question on that? I'll assume silence means you got it. Okay, so then here, let me drop down and show you. We're going to have to flip through a bunch of slides. Here's the MRE economic model. Economic model would be that 100% of the commission is tracked, that you spend 30% on cost of sale, 30% on operating expenses, and you drive 40% to the bottom line. That's the other reason that you want to track your cost of sale. You want to look and see, are what you're paying your buyer's agents, your brokerage, and everything added up, are you exceeding that? If so, you're probably overpaying. You're either overpaying to your brokerage or you're overpaying to your agents. But that's why you want to follow a model. And if you don't track your cost of sale, then I don't know how you begin to follow the model, right? So now, let me just skip through really quick. I want to show you, you guys don't need all that, this part. I want to show you a, so hold on one second. All these texts. Okay, so it's coming up after this section. Okay, so here's a sample, here's one section of how you read a profit and loss statement. If you look on here, you can see you've got account numbers, right? So, and then you've got lead generation. So 62,000 is lead generation. Then 62.1, advertising, 62.3, print, 62.4, internet lead gen, 62.5, entertainment. And then you go back down to 62,000, which is total lead gen, and you bring it across, right? So what you're doing is you take your main category, your 62,000 in lead gen, then you take all of your subcategories for lead generation, and then you total them back up. So then eventually it starts to look like this. This is the top portion of an agent P&L. And if you see on the top portion of an agent P&L, this is the income section where you have the income, cost of sale, and then operating expense. Right here, you've got all of your income. You've got 41,000 residential income, listing income, sales income, referral, and then leasing. Then you do commercial income if you have it, and then you total it all up. So it makes sense. Now, just to give you guys an idea, I actually have more categories in mind. I do, because I also still do some short sales and REOs, I have equity listing income, which means the property had equity when we listed it. I track my short sale income only because I do a lot of them, right? It's still probably 25% of my business. So I like to track that source of income on there. And then for sales income, we call it just buyer agent income. And I have new construction income. So this amount that you're plugging in here into your P&L is the gross amount, right? The amount that you're plugging in here is the amount that was paid by the consumer at closing. So this is the gross amount. So now when we move past that, now we get to cost of sale. This is where you net it out. So now you say, okay, if I take all of my income and then I reduce what I paid commissions to the office, royalties paid, which would be commissions to KWRI, listing cost of sale would be listing agent splits, buyer cost of sale would be buyer agent splits, other commissions paid out could be outbound referral fees. So you would track, right? And if you have a referral, you're tracking the entire amount here. This is the listing income. And then here, I paid out a referral to an agent in another state. You put that amount here. These are negative amounts, right? So these are all negatives. So then when I add up my total cost of sale here, when you take your total GCI, which is your income here, sorry, I'm in the file itself, and then you take your total cost of sale and subtract the two, you have your gross profit. Your gross profit, the vast majority of the time, is going to come really close to equaling the Rainmaker's 1099. It's going to come pretty close because it's going to be all the income less the cost of sale. The gross profit's going to be pretty close to your 1099 from your brokerage on there. But keep in mind that's your gross profit. Then we move on into operating expenses, and then you'll see, right, 61,000 salaries and benefits, and then you have 61,100, 61,110, right? So you run these all in here, and then you have your 61,000 total again, right? And so all of your operating expenses continue on just like that. We're going to continue on, down you go, right? So as you go through, then you get to your total expenses, and then you take your gross profit less your total expenses, now gives you your business profit, which is everything before taxes. So it's all of your income before taxes. All right, now let me just take you to a summary sheet. Here's what a summary, non-expanded P&L looks like. Total income, your total profit and loss up here, followed by your cost of sale here, your collapsed expenses here, and then your net profit. So that gives you your total P&L. All right, so does that make sense? Anybody have questions on that?
That does make sense, Matt.
It's Elizabeth.
Hey, Elizabeth.
Am I echoing?
Nope, you're fine. You might be echoing on your side, but I can hear you fine.
Okay, good. So I guess what my agent has been doing has been a personal P&L and not necessarily a business P&L.
Yeah, that's what most agents do.
Okay. And so the accountant that he uses doesn't necessarily need cost of sales as far as filing taxes for the government. Is that correct?
Right.
Okay. So as long as I have it on another spreadsheet and can see how much money the business made, that's our business P&L. So if for whatever reason we wanted to sell the business or whatever, you can see.
You want to know the real financial picture of the business at any time because you want to know if you're in model.
Exactly.
One of the first things agents say, well, what do you pay a buyer's agent? I pay him 50%. I pay him 60%. I pay him 40%. And I'm like, you don't know what you can pay them until you spreadsheet it out and you look at what you can really afford, right? In other words, there's models out there, and most of the time we end up overpaying people because we don't want them to leave, right? And so when you look at this, it gives you a model and a place to start from. Let me show you. I've got a dummy account here in QuickBooks. Let me show you my dummy account in QuickBooks on how you make this work. So hold on one second. I have a little funny dummy account because I teach the agent financials class. So let me just kind of show you what it looks like. It's all goofy data. So if it looks like the checking account's overdrawn by $800,000, don't anybody freak out. All the admin go, oh my God. So let me just show you how you do this. And then I think it'll make sense for you. We use QuickBooks Online, by the way, because everything's backed up to the clouds. It's a fixed cost per month. The software is always updated, right? So it's not a big. We like it that way. All right. Our internet here is so slow; it drives me crazy. All right, let's see. Let's look at this one. So I have a ton of things in here, but let's just look. If you looked at reports, let's look at this profit and loss statement. So do you see how on this profit and loss statement, which is kind of a funny one that we're running, but see how I have residential income, I have equity listing, buyer income, referral income, rental income, right? And then we have down here, listing agent cost of sale, buyer agent cost of sale, ISA cost of sale, right? Outbound referral fees paid, and then total cost of sale, right? Now, in this one, let's see if I can see how they're. Hold on a minute. Income. Did I just collapse that? I did. I probably haven't put anything in this that would bring up the referral fees. I'm sorry, the market center commissions. We probably just haven't put any in there. But if you can see kind of how that adds up, and then you have all of your expenses as you go down, right? And then you have kind of your net income. And now I want to show you how you would run, how you get all those entries in, because it's really simple and everybody always freaks out about it. So let me just show you how easy it is. Let's say you're going to do a bank deposit, and this will be how you get all the entries in correctly. Let's say the total commission that came in was $10,000. So let's put in there, let's say it was a short sale. And we just happened to call, we always put in 123 Main Street, right? And let's say the consumer paid $10,000 to us at closing, right? So that's $10,000. Now let's say I have not capped, so I need to pay my capped dollars in. So I'm going to pay 30% of that. So I'm going to go down to, where is commissions paid to the office? Let's see. Go to the market center. It's going to drive you guys nuts because I don't even have them in here. Hold on a minute. Oh, I probably don't have them in this dummy account. I thought I did. Oh, okay. Cost of sale. Here it is. So see down. So now I've got to pay the office. So KW cap, right? So I'm going to put into KW cap right here. I paid them 30% of that. So I paid $3,000. But here I do a negative. Put the negative sign in. I paid $30,000 right on there. Now I'm going to put in here. And I got to pay my royalty. Right. So let's go down and pay the royalty. Right, so that's going to be a negative $600. So this is what was withheld on there. Oh, and by the way, I have to pay a listing agent. So let's go down and pay the listing agent, and the listing agent's getting 25%. So let's go down, cost of sale to listing agents, and I pay the listing agent 25% of the 10. So I'm going to go in here negative 2500. Okay. Now, do you guys see this? So I've got the 10,000 was the gross. This is what was withheld from my check on my behalf by the market center. Now do you see down here where it says new deposit total? Now that amount, the 3,900, matches my bank deposit. So when I hit record down below, hit save and new, this deposit will be correct. It'll go into my bank register as 3,900, which is the amount of my check, and all of those categories will have the right data in them in order to run the right P&L. Does that make sense? That's my big tip on how to do this. Instead of doing lots of journal entries, you do it all on the bank deposit form. So I got 10,000 at closing. The company withheld all of these three figures here. This matches up. The 3,900 is what my actual check was for. So now when I hit record, it's going into the operating account correctly. I'll hit record on there, but yet all of that data was put in. Right? So hopefully, does that make sense on how you would get there?
Yeah, I think that's the piece that we were missing is recording that into QuickBooks based on the amount that the client paid. I have it all on a spreadsheet, but it doesn't. My P&L doesn't put out the way that it should. All I have is the spreadsheet. So what you have makes sense.
So if you track and do the gross commission in, and then do negative amounts in the deposit ticket. To track for where the money went. You can also, if you paid KW Cares on there, right? I pay KW Cares on there. You just do a negative, $50. We do $50 per transaction at KW Cares. So you just put that account in there, and then that's going to hit your charity account, right? So do negative 50. What you're trying to do is that when you hit record, it matches up with your bank deposit, and all of your bookkeeping is now accurate on where you've put all what's really happened with the gross commission.
Exactly. Got it.
So for all of you guys that are on mute, does anybody have a question on that? So I didn't intend this to be a long class. I just wanted to give a little example on how you can do it. You can hit something in the chat box or unmute yourself, but is there anything else I can do to help or share or show you on why or how you would do that? So Jessica says, I'm assuming you enter everything for the MRE codes on the front end. Yes. So what we do, Jessica, and I can show you. Let me just share my screen again. Share my screen. So what we do over here, if you look in QuickBooks, which I think is the easiest one to work out of, see where it says chart of accounts? When this comes up, it'll take a second for it to come up. We just go in and we kind of create our own, right? So we add our own account numbers. We started with the same numbers sequence that were out there, and then you'll see it just kind of kicks in right down below. So we just start adding all that stuff in here. This is a funny one. You might see 2 or 3 things in there 3 or 4 times or stuff like that, but it doesn't matter. That should give you the drift. So what you do is you just sit here and see up here where it says new. You just go ahead and hit new, and you just start adding in what type of account it is if you're going to use account codes. But it helps you on day one to get it all set up on day one. It'll make your life easier. So take an hour on a Saturday and just plug them all in. What else can I answer for you guys, or what else would be helpful for you that on the P&Ls and tracking the gross and the cost of sale? Anybody else have something I can add or help with? I'm pretty passionate about agents treating their business as businesses and not just as being salespeople. So if there's anything I can do to help, I'm pretty passionate about getting the information out there on models and systems on tracking the finances. Of course, there's lots of ways to get there. This is the intent of MREA, is that you would track all these things and have models. In other words, it's really hard to have a 30% cap on cost of sale if you don't track it, right? So it's hard to follow the model if you don't know what the model is. So I'm pretty passionate about teaching it. I'm passionate about sharing it. If there's something I can do for you to help out, feel free to let me know, and I'll be happy to share. But that kind of gives you a broad overview on how to do it. If anyone else has got a question, feel free to chime up. If not, I'll say goodbye and wish you a great week. It's Monday. It's time to get out there and make it happen. You are welcome, Brian. Glad to do it.
Yeah, this was perfect, Matt. Thank you so much for your time.
Yeah, you're absolutely welcome. I don't see anybody else popping any questions there, so I'll keep my eye on the Facebook page, but if something comes up, feel free to reach out. Be more than happy. If you get into it and you need some help and you want to do it, I love doing webinars instead of answering everyone's question individually, because it's easier for me to get 5 people or 8 people on at once and give you some suggestions than it is to do it individually. So if you guys are struggling with something as a group and I can jump in and help, please let me know.
Thanks so much.
All right, you guys go have a great day. Go sell lots of houses. I wish you a great 2017. Bye.